The US Federal Reserve has been rapidly raising interest rates in a bid to control inflation, and most indicators point to more increases this year. This might have detrimental effects, according to Cathie Wood of ARK Invest. In a string of tweets in November of last year, Wood linked the present state of affairs to the circumstances that contributed to the Great Depression. As 10-year Treasury yields plunge 80 basis points below 2-year Treasury yields, the steepest yield curve inversion since the 1980s, Wood, who has previously criticized the FED's interest rate hikes, claimed that the bond market looks to be indicating that the FED is making a big error. The prominent stock picker and chief executive officer of ARK Invest criticized the Federal Reserve's aggressive plan to fight inflation, joining other experts in saying the drawbacks of the central bank's interest rate increases may ultimately outweigh the advantages. However, other experts warn of the exact opposite risk in terms of its monetary policies. According to a series of tweets, the likelihood of deflation is far greater than that of inflation, and commodity prices and huge retail discounts are other factors emphasizing her point. The bond market seems to be signaling that the FED is making a serious mistake. At negative 80 basis points, as measured by the 10-year versus 2-year Treasury yields, the yield curve is more inverted now than any other time since the 80s, when double-digit inflation was entrenched, she said in a tweet. In the midst of alarming indicators from the bond market, US Treasuries rose and Asian markets dipped slightly. Fears of a recession were evident in the bond market, as demand for longer-dated securities pushed this week's severe yield inversion below that of 2-year notes by the most since the early 1980s. The FED's interest rate increases and other central banks' tightening policies have caused significant declines in the housing and stock markets, and an increasing number of analysts are concerned that the unrest may ultimately yield an intense global recession. However, policymakers have not wavered in their resolve to combat inflation, which is still close to 4 times the FED's historical 2% target. In a recent announcement, central bank officials suggested they might slow the pace of hikes. However, FED Chair Jerome Powell stated that the risk is doing too little rate hiking, not too much, and that the economic data suggests the FED may ultimately move rates to higher levels than it projected in September. In wake of all of this, hypersonic flight, 3D printed humanoid robots, drones that can carry groceries, and genetic biomarkers for the early identification of malign tumors are just a few of the products and services that, according to Cathie Wood's ARK Invest, might change the marketplace in the next 10 years. Cathie Wood's ARK Invest research team prefers a top-down analysis of what macroeconomic issues impede social progress before examining what innovators are doing the most to solve them. This is in contrast to valuation methods and models, as well as spreadsheets, which frequently place emphasis on short-term fundamentals like a company's forward-year cash flow or earnings per share. A significant portion of the research findings in Big Ideas are based on the application of so many references to it in her research that it deserves its own page on her ARK Invest website. After examining everything from short-term crypto contracts to orbital aerospace, Wood believes businesses that are successful in upending established industries will experience super exponential growth, increasing their total value by an impressive 40% per year on average until it actually reaches a startling $200 trillion by 2030.